welcome to this special episode of Public Sector Leadership Series. My name is Anoop Verma. Today, our guest for this special episode is Mr. Rahul Mithal. He is the Chairman and Managing Director, RITES Ltd, which is an over 50-year-old public sector company and an engineering consultancy corporation specializing in the field of transport infrastructure. Yesterday, RITES declared its Q3 results. During the course of today's conversation, Mr. Mithal will provide his insights on the Q3 results and the company's growth prospects. Welcome, Mr. Mithal.
Thank you. Thank you. Let me go ahead.
I'll just ask you about the Q3 results. Yesterday, you declared the Q3 results. How do you view these results? What is your analysis?
Let me give you a brief overview of the Q3 results. And if you compare YOY,
Yes.
the revenue took and both bottom line and top line took a hit of about 15 to 16%. But if you see sequentially, and this is in line with our focused strategy of improved execution, all the parameters Q2 to Q3 saw an uptick. So whether it's the top line, whether it's the growth in the EBITDA by about 14%, PAT grew substantially, margins, both the EBITDA margins and PAT margins grew by about 1%. So this is in line with our, as I said, focus of increased, improved execution. Parallelly, the biggest highlight further in line with our strategy, two-pronged strategy of aggressive order inflows, we got the highest number of orders in any quarter in this quarter. So we got 110 plus orders totaling to 1900 plus crores, which is nearly equivalent to about 2200 crore order in the entire previous financial year. And it is about 3 times the orders received in the previous quarter too. So that's the kind of order inflows. And we have now got an order book of 8,000 crores plus. So with this, in a nutshell, I would say that Q3 performance is in line with our two-pronged focus strategy of improved execution as well as aggressive order inflows.
As you pointed out, there has been about 15% decline from last year in the revenue for the quarter. It's about, I think, 575.8 crore.
Yes.
And there is a top line. Company has reported a top line of about 682 crores. So, and you are saying that there is a order book of 8,000 crore. So how does this impact the profitability and top line going forward?
You see, if you compare the 9-month to 9-month YOY, there's a hit of total of about 200 crores on the top line. And this has resulted into a hit of about 80 crores on the bottom line. So the 200 crore hit has resulted in 80 crores. A part of that 80 crores, about 40 odd crores hit is because of the dip of 200 crores. And another 40 crores of that 80 crores is because of the decline in EBITDA margins of about 5% YOY. So that's the kind of comparison if I do 9-month to 9-month YOY. Our aim moving forward in quarter 4, and again, this is in line with the strategy which we started this FY with, knowing that the old order book is, subsiding and we have to get newer orders moving forward. So as these new orders have kicked in, they will start generating revenue definitely from Q4, Q1, Q2 onwards. A focus strategy for Q4 is that, again, to be sequentially better than Q3, so that overall in this FY, we come as close as possible to the previous FY. And on a 9-month basis, we are about 11% down in the revenue, about 200 crores, as I said, and about 25% down in profit, about 80 crores. So we would aim that Q4 we improve further so that overall FY, we are at least limited to below 10% down in top line and about 20% or down in the profit. So that's the strategy for Q4 moving forward to see the FY on a complete basis.
Okay. Since 2018 or 2019, the company has been growing at a very aggressive pace. So would you see the year, this current financial year, as a year of consolidation? You have been growing so fast, and most of the order books were, as you said, exhausted by then.
Yes, you're very correct. And we realized this right at the beginning of this FY. So our all efforts in the change dynamic scenario of competition, the every quarter, the dynamics are changing. And if you see comparison within a year, the order book used to be 50-60% plus on nomination basis. As we end this quarter, our order book is 60% competitive basis. And as I said, we are maintaining that strike rate of being a one order a day company for last 4 quarters consecutively. So we are continuing to get orders on a competitive environment. So definitely there has been a hit on the top line and the margins in this FY. But with this all-time high of 8,000 crores order book, we definitely see that the coming FY, as these orders, including the 1,300 crores export orders, which we have got now after a gap of about 3 to 4 years, we see at least a 20% growth. We aspire for at least a 20% growth in the top line in the coming FY, and at least aiming for a double-digit healthy growth in the bottom line in the coming FY. So as you correctly said, this FY is a year of consolidation, hedging the losses or the dips or the hits as much as possible, and definitely seeing a very aggressive growth in the coming FY.
The company has declared its third interim dividend of for financial year FY25, which is about 1.9 per share.
Yes.
The record date is February 1. So I think this is because RITES does not have to make too much of capital investment. So you can, give dividends and make the investors happy.
Yes, and this is our business model, which we have been reiterating very clearly in the previous quarters also. We are not a construction company. We are a low capex consultancy company. Our core strength is consultancy. We are a debt-free company. Our working capital requirement is minimal. So with this business model, and we are not deviating from this core business model at all, in spite of whatever be the competitive pressures on a particular quarter or a half year, we have continued to maintain this dividend payout ratio of 95% plus. Last FY, overall, we gave a 95% plus dividend payout. We have continuously declared 3 interim dividends in this FY, again, averaging out to 95% plus. So we will continue to maintain this trend of a good payout to our investors.
The shares of RITES are trading about 1.2% lower at the time when the results were out. It was 251.6. I didn't check today. The stock is down about 40% from the peak of rupees 412. Much of this fall could be related to global factors, I think, and also due to because this is a year of consolidation, as you said. So globally, also most of the stocks are trending a bit low. So what is your message to the investors?
You see, as you correctly said, there are overall there are a lot of factors which you have seen across the markets. But as far as RITES is concerned, if you see what is our core strength, our core strength is that we are an infrastructure consultancy company across all areas of infrastructure. So except oil and natural gas, we cover all areas of infrastructure, 13 different verticals. There is a continued huge push in infrastructure, both domestic and international. We are continuing to get all-time record orders. You're maintaining a strike rate of one order a day. This order book is the highest ever of 8,000 crores. This quarter has seen the highest ever order inflow of 1,900 crores. So the basic fundamentals are very strong, and that's what I can only assure investors. And as I said, that building up on this strong platform, we are already aspiring to have a minimum of 20% growth in top line in the coming FY, and at least a healthy double-digit growth on the bottom line in the coming FY, because these orders which have come in the last 1 or 2 quarters will definitely start generating revenue. The export orders of 1,300 crores will definitely start generating a revenue of a minimum of 40% odd of the total export order book in the coming FY. So the fundamentals being very strong, and no real change in our business models, including getting international orders. We recently got an order in Guyana for highways for about 80 crores plus on a competitive basis. So these all are indicators of our basic inherent strength, and which is what I want to reach out and assure all our investors and stakeholders.
With your high order book and improved profitability, what kind of total annual revenue will RITES be targeting in the coming FY?
Well, you see, as I said, we would definitely aim for about a 20% growth from where we end this year. We are about, as I said, 11% down 9 months. We are aiming to peg it down to below 10% in the complete FY. So with that, where we end this FY, a minimum of 20% growth on that would give you the numbers where we are aiming at in the coming FY. And definitely, what we see those numbers are, we are aiming that to be the highest ever revenue for RITES historically. So whatever figure we have achieved historically, about 2750 has been our highest ever revenue historically. Definitely, we are aiming next FY to be higher than that.
No, there's some rise in protectionist sentiments around the world. Even the US is now asking, promoting their own companies. They want their own companies to be doing their work. And in the other countries also, we are seeing similar sentiments. So will your overseas operations be impacted by this?
See, the kind of opportunities which are coming up for consultancy, because primarily infrastructure consultancy, to my gut feeling, infrastructure consultancy still has a huge opportunities internationally. They, to my mind, are not going to be very largely impacted by these changing dynamics. Our strength is our experience of 50 plus years, having operated in international geographies, of giving that skilled experience. We have huge amounts of legacy experience with us, skilled personnel, skilled data, skilled past reports. So that will continue to open up opportunities. I really don't feel that that's going to impact us in a very big way. We still are bidding huge number of opportunities internationally in our RITES Videsh initiative.
Okay. Much of the revenues for RITES comes from the transport infrastructure sector. So how do you see the general growth of this sector in India? In the last 10 years, it has done very well. So, and RITES benefited from that growth. In the next 5 years, let's say, how are you projecting this sector's growth?
You see, the growth and the increased emphasis on infrastructure growth, capex growth, infrastructure growth across all areas of infrastructure, transport infrastructure, other infrastructure also, including institutional buildings. We've recently got an order from IIT Bhubaneswar, IIM Raipur. So even the focus on institutional building. So across areas of infrastructure, and that is the reason why we are capitalizing on it and maintaining that strike rate of one order a day for 4 quarters. That's the reason why this quarter has been an outstanding achievement in fresh order inflows. So I see this push and this focus on overall infrastructure growth continuing in the coming years. And we are very, strategically placed to leverage these opportunities across areas of infrastructure. And I see this trend of getting fresh orders across all areas continuing in the coming quarters.
Thank you, Mr. Mittal. Most reputed in analysts are maintaining a buy rating on the RITES stock. So that means, and few are recommending a hold. So this shows that there is a lot of faith in the company, and most people are expecting the company to do very well in the next FY. Thank you.
Thank you so much. Thank you for your confidence. And I'm sure that, as I said, the numbers and our basic inherent strength speaks for itself. Thank you so much.
Thank you.